Hello, hello, hello. Mic test. Hello, hello, hello. Mic test. So, guys, it looks like the audio is working fine here, and we are seemingly live on both platforms, YouTube as well as, and so I'll just wait for a few seconds while people who want to join in live can join in, and while I wait for more people to join in, let me just set up the whole thing. So, guys, basically, let's just start off now. So here's the disclaimer on screen suggesting that all content presented here will purely be for educational purposes. I'm not soliciting buy or sell. If you do go on to use the views presented here for your trading, investing, or any other purpose, you yourselves will be liable for your profit loss or loss of profit. So with that out of the way, and by the way, guys, if you have joined in, I will appreciate if you can confirm in the comment section if the audio and video is all good here. Even if you are on TradingView or YouTube, doesn't really matter. If you can confirm, that will be nice. Let me just run one more final check here. If the audio and video is all good. Okay, so on my end, it's looking fine. Okay, so let's, you can read the remaining part of the disclaimer by yourselves. Now, let's get ahead with the introduction here. So, guys, my name is Nirav. I'm the admin and owner of 50 Eyes Market Analysis, which is a website where I present my views, and I have been doing it since 2015. So, let me run you through the website very quickly. So you can check all my past analysis by going to market analysis section here, right? And my courses, personal classes, details you can inquire here. But most important thing before we move any further, I'll just like to quickly show off my accuracy for the last 6+ years. Now it is 7 years, but we haven't compiled for 2022 yet. So as you can see, in 2016, all the analysis that we did, we had an accuracy of 83.34%. 2017, our accuracy was at 87.5%. 2018, our accuracy came at 84.61%. 2019, 84.88. And if we move ahead, we can see 2022, our accuracy came out at 88.52%. Right. And if I scroll down, you can see that there's a list of all the instruments that have been discussed: crude, gold, S&P, Nifty, etc. And what was said about the instrument, that is the analysis here. And what later on happened, exactly as expected, not as expected, exactly as expected, etc., etc. So, and 2021 final one is 82.22. So, what I'm showing you here is the accuracy of all the videos and live webinars that I've conducted. Right, for 6+ years, the accuracy remained higher than 80%. Is higher than 80%. I should say, proper wording. Sorry. So, and seventh year, as I said, 2022, we have not yet compiled. And why I'm showing you off is that generally in this industry, even an accuracy of 60% is considered very high. Right. So that was for my quick introduction. And lastly, this webinar is both TradingView as well as right. So one second. Yeah. So TradingView as well as YouTube. So if you want to check the recording later on, you can just go to my YouTube channel, 50 Eyes Market Analysis, click on live, and then the 20th webinar will be available here. And this is the 20th webinar. And also just like to quickly point out that we conduct these webinars on Monday, Wednesday, and Friday of every week at 2 p.m. GMT. Okay. So you can join in live, or you should join in live, I must say, because there are many opportunities which will be missed if you watch it as a recording. Lastly, I'm also the author of the book called Think with the Market: Secrets to Achieve 80% plus accuracy using Elliott Wave. It is available on Amazon Kindle for instant access. And it discusses in detail how I use Elliott Wave for my trading. By the way, Elliott Wave is the area of expertise or the methodology which I use for my personal trading. That was all for the introduction. And the way we will proceed with the webinar is, first of all, we will go over the chart of Euro USD followed by EURCAD, USDJPY, EURJPY, crude oil, gold, S&P, Nifty, and Bitcoin. And once I discuss every single chart, like once I discuss Euro USD, I will ask you guys if you have any doubts. You can just post that in the comment section. If not, we'll move ahead. And similarly, will be the pattern regarding all these discussions. Make sure your questions are only related to the discussion we are doing, not outside the scope of these instruments. And if there is any problem with the audio or video, or if you guys can hear it, I would appreciate if you can confirm that in the comment section. Well, I'll just quickly run a small test at my own end as well. Yeah, so at my end, it's looking all good. So let's head over to our first chart, which is the chart of Euro USD, as you can see, guys, on screen. So nothing really has changed since our last discussion here. Last time when we discussed, I mentioned that this analysis of WXYZ is not looking very good here, and previously we were thinking the markets can go a lot down, like straight down movement, but with the current sideways congestion, it looks like any downward movement will see a bigger buying opportunity. So for Euro USD, my current view is that let's just wait and watch, and I'm holding off shorts. I'm not really interested in shorting this market as out of this moment or at this point in time. And another thing is that because of the holidays, most of the activity, or much of the activity, is lesser compared to past sessions. So there is not much expectancy for a big move, at least as of now. Maybe in tomorrow or day after tomorrow, we can see some, what do you call, great strength moves or huge moves. So Euro USD is just a wait and watch for now, right? Will be interested if this takes out the high, and that also most likely from analytical perspective. I'm not really interested in adding longs or shorts right now, but if I do, I will take small long positions, like very minor intraday longs, if I am interested in trading this market. But shorts, I'll hold off. And the reason for that is the WXYZ correction which we were following so far. It does not seem like it is holding up, because after this Z wave over here, should have started some correction in the downward direction, but it does not seem to be doing that at all. So it is very likely that this market is following some other count, and there are many counts which are visible at this point. And I'll just avoid discussing any of them until we actually see the defining moment here. So Euro USD is a completely wait and watch here. Minor longs, if you can analyze on intraday, may be possible at the break of the high, but nothing really big, no huge positions for now on this counter. That was my quick take on Euro USD. If you guys have any doubt, I'll just wait a few seconds in the comment section. Otherwise, I'll move to EURCAD. I'll be moving quick today because being the holiday, I'm not expecting much audience here anyways. So here on screen, we have the chart of EURCAD. And if you guys remember last time, I was saying that it is still open for shorts. We were, by the way, able to capture this 1:1 trade. We were able to capture the shorts when the market broke the low. And this was just placed out as a 1:1 trade. This one was our target one. This was our target two. One was around 1.439 and two was around 1.4263. But as you can see, it has not touched target two or even gone near it. So that's why I was saying in the last webinar that we are still open for more shorting opportunities, right? That is, this market can still go lower. However, nothing like this has happened yet. So what I'm going to do here is I'm going to adjust my alerts over here, because I think it is still possible that this market gives one more leg down. But as I said, because there is no confirmation, it's basically a wait and watch. With my alerts currently, let me check exactly at 1.44153. And if these alerts are triggered, I will possibly consider taking some short trades on this counter for the target 2, which I just mentioned, this one. right? But yeah, but basically that's the take here. But keep in mind, it is also possible that this market just remains sideways, like a possible triangle within this range. And even if this level is taken out, it never really goes to target 2. So that possibility is there. So based on that, again, any trades done on this counter again will also be in smaller lot sizes. I'm not very interested in creating heavy positions on this counter. There are better plays available at USDJPY and EURJPY, which we'll discuss next. That was my plan for EUROCAD. I'll move to USDJPY in a few seconds. By the way, I can see a lot of people are online on YouTube. So if you guys can confirm if you are understanding me and whatever we are discussing by typing in OK, understood or clear or something, that will be appreciated. Also, I'd like to request you to hit the like button on YouTube and rocket button on TradingView. That will help the algorithm to identify this as quality content and push it higher for new audiences to watch. Okay, so this is the interesting one. This is the one which we discussed last time as a high probability opportunity, and it is following our plan literally to the point. So USDJPY, as you can see over here on screen, last time we discussed that this B was either complete or it has some sideways movement remaining. We were not sure about the position of B, but what we were sure about was that this market should take out the low of wave A. That was this target minimum, right? And I said that it should go much lower, like even more lower than the target minimum, but that's the minimum expectation from the downside on this market, right? So it has sort of done that. Let me check. It is more or less near the low, and I think in a while it will touch. So it doesn't really matter if it touches it or not. It's 99% over there. So target minimum is achieved. If you were short, you should take out partial positions out here, right? And more importantly, let's discuss what's the plan of action on this counter right now. So those of you not familiar with the patterns we are discussing here, I'll just quickly show you that from this point of reference, which is the price level of 138.158, we have what we will call a zigzag in the downward direction. So a zigzag pattern will look something like this, right? So the first leg down is called an A. The up move is called the B, and the next leg down is called the C. So what we have is the A complete over here. We are not so sure about the position of B. It is possible that the B is complete here. It is also possible that the B might be propagating sideways. But as I said, the moral of the story is that we should see this C leg down. And this, if this is the C leg down, that's good. If not, then it will probably go sideways for B and then give the C leg down. Right. So basically, the target minimum achieved would, in the worst case scenario, be the point where the market turns from. But generally, it goes a little bit more lower. So for the cases that it will continue to the downward direction, we have the targets coming around at 129, right? So 129 is the next immediate target if the market continues to propagate in the downward direction as per our count. Secondly, if the market still continues after the 129 target, then next target will be this trend line, this red trend line. So basically, next target will be around 127.30 or lower levels. So this is our prospective downside, or expected downside, I should say. So USDJPY, as I said, we already discussed it. We were already short on it. That was the view discussed in last webinar. So if you guys were able to catch it, that's nice. And I would appreciate if you guys, if anyone of you actually caught it, would post it in the comment section. But anywho's, and nothing really to add here. It's just following the game plan. So just trail the profits, book partial, the regular drill, of position management. Next up will be the chart of EURCAD. If you guys are able to catch whatever I'm saying here or discussing here, let me know in the comment section. It is looking like either there is some issue with the comments or the participants here are today not interested in talking. So anyways, not like I can do anything about it. Let's move quickly ahead to EURJPY. EURJPY again. I like to point out here that I keep saying you guys should attend these webinars live, and the reason is that whatever strategies we discuss, sometimes they play out right afterwards, sometimes within 30-40 minutes. So it is most beneficial for you to watch these webinars live so that you can follow along with the trades. And if you guys recall, we were able to capture the EURJPY fall right around this level. So around the level of 141.85. So around this level, we were able to capture the fall, and the minimum target suggested, as you can see with this blue line, is at 138.799. It has not yet been achieved, but it is heading very nicely and swiftly towards that level. So it is again in profits. It is also working out precisely as per plan. Just to quickly refresh what the whole scenario here is, or the whole situation here is, we are seeing what is possibly an impulse in the downward direction, and within this impulse in the downward direction, this is our point of reference. Let me just quickly show you guys. From this point of reference around the price of 145.848, we expect the market to move down in 5 waves. So generally it should look like this. This is, by the way, impulsive progression in the downward direction as per Elliott Wave guidelines. First leg down is called the 1 down, 2 up, 3 down, 4 up, and 5th down. So if you look at the rough chart, this is the 1 down, 2 up, and we are currently expecting that this market is going down for the 3. Right. So if our count is correct, then the minimum we expect is the market should take out the low, which is 138.771, and other targets would suggest that the market can go to, let me just quickly check, it can go to 135.9 and much lower levels. We don't really need to check the targets there. So you get the idea. Much more downside is possible on this counter, and it is still following your plan. So just again the same old thing, just trail your positions which are in profits, right? And yeah, keep booking partial from one level to another. So nothing to add here on EURJPY. And keep in mind, guys, trailing is important because in case the analysis just reverses, something else starts to happen in the market, at least you will be getting out with some profits. So that's why I keep saying trail it, right? And in cases where the market reverses, your trail is hit, but you think the analysis is still correct, you can always re-enter the market. That's not an issue. So that's my take on EURJPY for now. So let me see. I seem to have gotten a comment. Hi, crazy DFX on TradingView. USDJPY we just checked. You can check it in the recording like 5 minutes back. We discussed it. Okay. So next up we will discuss crude oil followed by gold, S&P, Nifty, and Bitcoin. So let me just quickly head over to crude oil. By the way, obviously the markets are closed, but there have been some development on this counter since we last discussed it. So I will check it. There it is. The chart of WTI crude oil. So if you guys remember, last time I was saying that it is possible that this market will still continue going higher and go into the white resistance zone, right? And it looks like on Friday's close, the market decided to give us a sort of sign that it will be doing that. So what we can see here is that the market has gone near the last high. So as such, I personally will be interested a little bit more upward, after a little bit more upward movement, to take on longs. But theoretically, it has sort of indicated that this is the direction it is going to follow, right? Most conservative approach will be to take longs only at the break of the last high, which is on this chart at 81.332, right? So one second, let me load the screen. Yeah, there it is. So as I'm saying that conservatively speaking, you can wait for the last high to be taken out, but practically speaking, it looks like it is heading for this count which we discussed in the last webinar in the CN color. And if you are not really familiar with what this thing is, this is called Elliott Wave Impulse, which I just discussed in the last chart. So again, discussing it for people who may have joined later on, maybe watching only this part of the webinar. So we are expecting 5 waves. First one up, second down, third up, fourth down, and then the fifth up, right? And within this progression, the first one is complete here. This might be the second complete, and followed by the third up, fourth down, and fifth up. So this is what we are expecting here, right? And the target for the completion of the whole move is within the range of 84.9, sorry, 84.88 and 82.086. So crude oil, we expect the market to head higher, right? And setup, trigger, entry, everything we just discussed. If you guys have any doubts on this chart, I'll just quickly take them. Otherwise, we'll have a very small and quick look at gold, where nothing seems to have changed so far. Okay, I do not see any questions on this chart, so I'll just quickly move ahead with gold here. So in gold, as you can see, nothing really has changed. Our last analysis, by the way, the market is closed. I'm just checking out because we check it regularly and because you can get some more points, more refined points before the session opens. So last time when we discussed, the plan was basically the same. The plan was that if the market breaks this trend line to the downside, we might become interested in selling. But the most importantly, if it breaks to the downside and then retests, then we will be having a very high probability short setup. So nothing like that has happened thus far. So that basically means gold is still a wait and watch. Nothing new to add here. And if you want to see the detailed discussion on gold, you can just check the last or the 19th webinar, which was conducted on Friday on 30th December 2022. I think it was 30th. Yeah, it was 30th. So no change on gold. S&P also, the session is closed again, but small points I want to discuss after the Friday's webinars, which have come to light. So on S&P's chart, as you can see here on screen, last time when we discussed, we were discussing this thing as a possible triangle from this point of reference, right? Possible triangle means we were expecting this to be the wave A up, the B down, the C up, the D down, and then the E up. So those of you not familiar, again, triangle is a pattern of 5 waves inside of it. In Elliott Wave terminologies, these waves are called A, B, C, D, and E. Once the E wave is complete, the market moves in the direction of the BD trend line. So basically in this direction, that's downside. So however, what has happened thus far is that it has not really moved in that direction. Of course, that does not relegate the possibility that this market can go down, but this move has been a bit too sharp. Generally, we expect sharpness in wave E. That's not very unusual. But then again, one more leg in the upward direction with an impulsive kind of characteristic trait is suggesting that maybe something might not be going right here. So the things to keep in mind at this point is that, first of all, longs or not longs, basically the market will open up to higher upside or new upside targets immediately if it crosses above 3860. Okay, so that's why I have alert placed at 3860. Secondly, this count is still valid, that is the market falling down, but there are no entries as of yet because of this strong movement over here, right? So to keeping that in mind, one second. So keeping the strong movement in mind, this strong movement in mind, shorts I'll only be interested and only if it really takes out this low, and to be more precise, not even this low, basically this trend line. So if this market breaks below this trend line, then I'll be interested in possible sell-off or possibly taking shorts on this counter. If it does not do that, then most likely either it will propagate sideways or it will take out the last half 3860. So that is our plan for S&Ps for the next sessions. It is going to open in 8 hours 34 minutes from now. So that will be what we plan to trade it like. That's our strategy here. Again, if you guys have any doubt, you can post that in the comment section, or I'll just move on to the next chart, which will be of Nifty, followed by BTC. the level of engagement has been the lowest in this webinar, which is funny because this is the 20th one. Every webinar I keep getting lots of comments, but here I'm seeing a lot of people are online but no comments. So anyways, let's head over to our chart of Nifty. So last time when we discussed Nifty, my view was that it was looking bearish. However, there was also the analysis suggesting that if the market takes out the last high, then we will be looking for longs. It remains the same. This market has not taken out the high, neither has it done anything remarkable in the downward direction. So, and also the world markets being closed, we don't really have a clear view of what's going on here, right? So again, Nifty is still a wait and watch, and the longs above what is this 18360 still remain a valid thing. So above 18360 we expect the market can take out more huge upside levels and go much higher. Yes, happy new year to you as well, Duke trader. And I know it's a holiday in US. I am also a trader for 9 days. But the thing is that we discussed these markets in every webinar on Monday, Wednesday, and Friday. I did not want to break the routine. And also by Wednesday, markets would have opened. So it's better we discuss the strategy beforehand. Yeah. So that's my take on, or quick take on Nifty 50 over here. Longs are still valid over here, right? And levels I just discussed. If there is any doubt, you can just type them in the comment section. Is the E-wave higher degree SPX? I'm not sure what you're talking about. If you are interested in the longer time frame counts, just check 3-4 webinars back. Around 13th webinar, I have discussed the S&P count in much detail. I'm not going to cover it today. The participation has been very low, and also your question is unclear to me. We are all together, Freddy. Yeah, yes, Freddy, that's true. So one thing which is always trading is Bitcoin. Yeah, so let's have a look at this last thing. And what kind of a name is unknown? If you are going to participate in a webinar, have a real name. You can remain anonymous by using a fake name as well, right? That just puts me off watching these stupid user IDs. Anyways, heading over to the last chart, which is BTC. This is the chart of BTC here on screen. Let's see if there has been any development. And it remains sideways as always. So guys, if you were following me in the last webinars and last to last and any of the past webinars, BTC has not given anything significant to be precise. Right? Our analysis has always suggested that more downside can be seen from this price level. And the reason for that is that we seem to have completed a corrective structure here. Now, I'm just discussing it for the sake of people who have not seen my past webinars. One correction completing here either suggests more downside is possible, straight more downside, or secondly suggests that it can propagate sideways, maybe give one more up leg and then fall, right? So basically it suggests more downside is open for Bitcoin, right? Now because downside is open, we have already marked the targets for this downside movement. Our targets are coming around at 15,250 and 14,790, right? So these are the targets we are expecting on this counter, right? Only time when we will be thinking that our analysis has been proven incorrect is if this market really goes ahead and takes out the 21,450 level upside, right? So if it really takes out this level, then and then only we will say that maybe some upside is there and we were wrong. Other than that, it's all just sideways and then down or straight down. So one scenario in white and one scenario in orange. That's what we are expecting in this market. Nothing new to add here. And guys, if you guys were here and you like the content, then I will request you one thing and one thing alone. Please share it with at least 3 people in your circle. If you have a Discord channel, a Telegram channel of traders or some forum which you follow, something like that, please share it there, where more serious traders can watch my content and join in. And most importantly, of course, hit the like button on YouTube, rocket button on TradingView. And there has been a question. Let me just quickly check that. 15700 is what? 15700 is a resistance. 15700 you can say is a support, not a resistance. It would be a resistance if it was on the upside. But yeah, it's a support. But what of it? The market is still open to downside, so it will take out supports. That's our analysis. Yeah, guys, before I wrap things up here, and this has been the quickest webinar thus far, only 30 minutes. So or something. Generally, we go for an hour or more. So anyways, before I close the webinar, you can always follow my work by going to my YouTube channel, 50 Guys Market Analysis. These webinars are broadcasted live on both YouTube and TradingView. Mondays, Wednesday, and Friday is our timing at 2 PM GMT, right? And if you want to check out more of my work, you can also check out my book called Think with the Markets, Secrets to Achieve 80% plus accuracy using Elliott Wave. It is available on Amazon's Kindle platform. And whatever. Yep, you can check my video course, and if you're interested in personal classes, you can just send the inquiries there from my website, Training Program LT. Nothing really to add here, right? And I'll just quickly check if you guys had any more further queries. Yeah, so I think I have already answered your question, Fernandez, and nothing really to add here. I hope you guys share my content, like it, and I'll see you in the next one on Wednesday, which will be the date of 4th January 2023. And lastly, guys, Happy New Year. So that was it for this webinar, guys. Talk to you soon. Bye.